What's going on, traders? Welcome back to my YouTube channel. I hope you're doing well. Today, I thought I'd do a little upload. I wasn't planning to upload until Friday, but I think that this would really benefit you because I'm getting a lot of questions with regards to just some of the simple aspects of trading. Like, when do you know the trade is retested? How do you know which direction to take the trade? Can you tell me how to identify currency strength and which direction I should be looking for the trade based on the intraday timeframes? And all these questions have accumulated. And I think this video that I will share with you, this is from a live session with my students of the academy. And I was going through a trade idea with them that had played out or was playing out, and just broke it down to them in terms of the step-by-step process that you want to be looking at trades. So I usually wouldn't share this, but I think that this would be really beneficial to you, because unless you fully understand the concepts and the ways that I trade, then you might, get a little bit confused or then start deviating. But I think with the simplicity of this video, you'll be able to draw at least one or two things from it. And I hope that it does benefit you. Take a look at it, see what you think, watch it straight through till the end. And of course, as always say, if you enjoy the video, make sure you smash that like button for me, turn on notifications, and subscribe if you've not already subscribed. Now, looking at Aussie dollar JPY on the 4H time frame, we can see that the structure of this market has been pushing for a very long period of time. And I think this is a fine example for us, even for myself here, just to continually remind ourselves, is when the market is trending up, or when the market is showing bullish signs, or when the markets are continually breaking structural highs, or when the market are continually respecting higher lows and retest levels, what we need to be doing is continually buying the market. Because how many of us have probably sat through the structure pushing bearish for the last however long, and then the market structure pushing bullish for the last 2 or 3 weeks and not taking a trade? I can say for sure I don't trade AUDJPY, so I dodged that bullet there. But if you do, think about how simple it could have been if you just identified from let's say a 9-year-old's perspective that the structure of this market was pushing bullish, and all you had to do was wait for a bullish signal, price to break a structural high, or look for a retest in order to take a trade. And then once you've executed that trade, just hold it until you obviously get to your targets and manage it accordingly whilst in that trade, what kind of results you could have been getting. So many times we see the markets leave without executing a trade, and then guess what happens? We look back 2 weeks later to see that the market's left us, and then guess what? We never got in. So it's worth considering. Now, when you get to this stage, you do kind of think that the market is super extended and there's going to be a chance where price has to reverse. But I think that is just a limited mindset. And I think that's the mindset of most retail traders, constantly looking for the market to reverse, or areas where they can get in the market first before they see the market continue continue in the opposite direction. But it's not even continue, is it? Flip in the opposite direction. I think personally, based on what I just said and based on what I've just advised you all, it only makes sense based on the current behavior of this candle that we continue to look for buys. Now, the previous behavior from the market open up until the London open or pre-London has been bearish. So this could just be a London open move right now, or this could just genuinely mean that the Aussie dollar is strong. That can also just genuinely mean that at the moment, the pound is weak and the dollar is strong. So what do we need to do? We need to formulate a plan. If the structure of the market is going to be pushing bullish, we need to see price break structural highs. That is a number one fact here, because nobody should really be buying into structural highs. So once you get more experience, you'll be able to isolate levels like this and then identify on the hourly time frame that this is a resistance in the market. Now, once we have a resistance, we need to isolate a structural low to make sure that we know where the market could go, potentially before flipping bearish. I think this is a sure sign at the moment that for the last however long, we have been moving sideways, and the current behavior of the market is indecisive. So we're ranging. So if the behavior of the market is going to continue bullish in line with the 4H trend up, then all we want to see the market do is take out a structural high. This information to the left here, which is a strong break and a break back in, to me is an indecision. The only time I'll be concerned about it is when the market gets back to the structural highs, which again now is another wick rejection area from an intraday perspective. But other than that, I'm not too concerned about it until price gets back here. So if I'm looking for buyers today, what I'm going to want to see on Aussie dollar JPY is the market convincingly break the structural high. If I'm looking for buys from the bottom, then you're looking for buys from a retest level. This is your retest level. Now, the market is already left floating between 8181 and 8156, meaning that the price is in the middle of nowhere. Now, this could be traded because what you can do now is isolate a level where price breaks above the highs, and then you can scale down to an intra-time time frame, identify the break of structural highs. So in this instance, this will be the first break of the downtrend. This will be the second break. And then what you can be looking to do is you can be looking to take the retest off at this level or the retest off at this level. And this just illustrates to us the new uptrend that's being formed in this direction. If you're not already in this trade, then the best plan of action right now is to wait for 81.81 to be broken. And I personally would say from a 4H perspective, at least bare minimum, have this price push close into this level and then take the trades on the next 4H, or even better still, see this price action break the structural high in anticipation of a continuation higher. Okay. I think Aussie dollar JPY buys is pretty sick this morning, especially here. Looking at this retest level, because this is the first sign. And look here on the 5-minute time frame, you have the new uptrend that's forming with this, which is the bullish behavior. You have the area here in the market. One thing you want to be doing, traders, is not looking for these immediate retests. We did speak about this last week on the 100 trade challenge review. Do not look for the immediate retest until price action break structure, leaves for a period of time, then come back. A trader mentioned to us last week, I think it was Vladimir, who said he's looking for deep pullbacks. So this is a deep pullback with bullish behavior. And then look at this tradable opportunity here. You have a bullish close in line with a 4H timeframe candle, which is pushing bullish. You also have price pulling deep into a key level. You also have the retest. You also have the intraday trend, and then you will just take this trade in anticipation that price will continue bullish. I think on this occasion, you just go for a 1 to 2, because this is the key level where price can react to, and that will be your trade on the 5-minute time frame. Pretty simple trading here, traders. You know, we're only looking for simple break and retest. We're looking for continuations of structural highs here. We're looking for bullish behavior from an intraday perspective and from a higher time frame perspective. And then you have tradable opportunities that look something like this. Okay, traders. So I hope you enjoyed that video. And as I said, it is very informative. And for some of you, you may need to watch that through again. But what we're highlighting in this video is just the simplicity of how you can be trading a break and retest, or looking for the direction in which you want to trade, or the currency trend. We are just looking to trade with the markets, not against them. Not looking for any reversals, just simply focusing on what the market's doing and then jumping on the train in line with it. You could see at the end, the Aussie dollar JPY trade ended up hitting the key level where we anticipated the rejection. And as you can see, if you did take that trade as a deep retest of structure, you would have got into a beautiful trade with that bullish momentum candle. But as you saw, once it got back to that level, we can see that the price rejected. Just bear that in mind when you're trading. Don't be greedy. Target the levels where you know price should come back to. If you know there's a high chance it's going to reject because it's a major level on the higher time frames, then just accept the profits that you get from this trade, or lock your trade in at break even. Whatever your style is, it's up to you. But just remember, focus on the process. There's always a story to every single trade. Once you've got the start, the beginning, the middle, and end, make sure that you follow that plan or that way of executing. Let the trades play out. And then I can promise you, if you have a systematic approach in the long run, you will make consistent and profitable results, or see profitability, should I say. Anyway, as I always say, I hope you enjoyed this video. Smash that like button, subscribe if you're not subscribed, turn on notifications. And until next time, continue to trust the process.